Section 86. Definition of non-stock corporation.
What's the difference between a stock corporation and a non-stock corporation? A stock corporation has two qualifications, and if the corporation has only one of these qualifications, that corporation is non-stock. And what are the qualifications of a stock corporation? Number 1, it has an authorized capital stock divided into shares, and number 2, being authorized to declare dividends from surplus. Surplus is also known as surplus profits. So if a corporation has only one of the two qualifications of a stock corporation, then it is a non-stock corporation. The corporation may have an authorized capital stock divided into shares, but not because it has an authorized capital stock divided into shares will it necessarily qualify as a stock corporation, if in the articles of that corporation, there is a provision that, in no case shall the board of directors declare dividends, that corporation is non-stock.
So it shall have an authorized capital stock of 10 million shares of 10 million pesos divided into 10 million shares with a par value of 1 peso per share.
There is a provision which reads, in no case shall this corporation declare dividends from surplus. Because of that provision, that corporation becomes a non-stock corporation, because then there is an express provision or agreement of the parties there shall be no declaration of dividends. Nevertheless, non-stock corporation may obtain profits as long as those profits are incidental to its activities, which are non-profit activities. The incidental profits must be used to implement its objective or furtherance of its objectives. A non-stock corporation cannot include purposes that will change or contradict its nature. For instance, a non-stock corporation cannot be converted to stock corporation, otherwise members may directly receive profits later on in the form of dividends or gains. But stock corporation may be converted to non-stock corporation. On tax exemption, certain non-stock corporations are exempted from paying income tax subject to some requirements. Revenue Memorandum Order 20-2013. It must be a non-stock corporation or association organized and operated exclusively for religious, charitable, scientific, athletic, or cultural purposes, or for the rehabilitation of veterans.
It should meet the following tests. Organizational test requires that the corporation or association's constitutive documents exclusively limit its purposes to one or more of those described in paragraph E. Operational test mandates that the regular activities of the corporation or association be exclusively devoted to the accomplishment of the purposes specified in paragraph E of Section 30 of the NIRC, as amended. A corporation or association fails to meet this test if a sue.
All the net income or assets of the corporation or association must be devoted to its purpose, and no part of its net income or asset accrues to or benefits any member or specific person. The rationale behind this exemption is that if it were not for the activities of non-stock corporations, the government would have performed such activities that would otherwise be financed through taxes. When it comes to cooperatives, the law generally consider them at the middle ground between stock corporation and non-stock corporation. They are stock corporation because they engage in for-profit activities, yet they are non-stock corporation because all the profits are given back to members. It doesn't require stocks or shares as evidence of ownership. Cooperatives operate under the principle of mutual cooperation among members for common benefit. Members contribute equitably to the capital of their cooperatives. No member shall own or hold more than 10% of the share capital of the cooperative. When it comes to homeowners association, though non-stock corporation, they are governed by the Magna Carta for homeowners and homeowners association. They are formed through registration with and regulated by the HLURB. Contributions from members are not subject to tax. Condominium corporations are governed by the Condominium Act. Contributions from members are likewise exempt from tax. Section 87. In Section 87, corporation may be formed for different purposes. They may be charitable, religious, educational, professional, cultural, fraternal, literary, scientific, social, civic service, or similar purposes, like trade, industry, agricultural and like chambers, or any combination thereof. But not all of the purposes mentioned will merit tax incentives. These corporations are divided into two groups, eleemosynary corporation and mutual benefit associations. Eleemosynary corporation is a corporation created for or devoted to charitable purposes or one supported by charity. It is a corporation created, not for private gain or profit, but for the administration of a charitable trust or for a charitable purpose, such as the maintenance of a hospital. A mutual benefit association is a social organization which provides insurance to its members on an assessment basis. Generally, non-stock non-profit organizations are exempt from tax but will cease to be exempted when its activities generates income which are not in a pursuant to the purpose, or is in contravene thereof.
Section 88. Right to vote in non-stock corporation. Voting rights attached to membership. Members vote as persons, in accordance with the Articles of Incorporation and the bylaws. Each member shall be entitled to one vote unless so limited, broadened, or denied in the Articles of Incorporation or bylaws. Members may vote by proxy, unless provided in the Articles of Incorporation or the bylaws if authorized by the bylaws, voting through remote communication and/or in absentia. While in stock corporation, a shareholder may vote all shares in his name. A shareholder may vote on matters of corporate policy, including decisions on the makeup of the board of directors, issuing securities, initiating corporate actions and making substantial changes in the corporation's operations. Non-stock corporation. Section 89. Non-transferability of membership. Membership in a non-stock corporation is non-transferable. Only members who believe in its purpose may join the corporation. The exercise of rights as a member is personal and non-transferable. Tan vs. Lim Gr. number 153468. Only those who are actual, living members with voting rights shall be counted in determining the existence of a quorum during members' meetings. Dead members shall not be counted. Exceptions. Articles of Incorporation. Bylaws. In stock corporation, the shares of stock or stockholders' personal properties. They represent political and economic rights over the corporation. The stockholders have the right to disassociate from the corporation. In stock corporation, thus, stockholders in a stock corporation can transfer their ownership of stocks in accordance with Section 62 of the new Corporation Code. Transfer is valid until transfer is recorded in the books of the corporation showing names of parties to the transaction, the number of the certificates, and number of shares transferred. Section 90. Termination of membership. Membership shall be terminated in the manner and for the causes provided in the Articles of Incorporation or the bylaws. Termination of membership shall extinguish all rights of a member in the corporation or in its property, unless otherwise provided in the Articles of Incorporation or bylaws. Non-stock corporation. Manner of termination. Its Articles of Incorporation or the bylaws may provide the grounds for and manner of termination of membership. While in stock corporation, the manner of termination. A person ceases to be a shareholder when he sells all his shares, either in favor of the corporation or of third parties. Effect of death. In non-stock corporation, death of a member terminates the membership. Generally, membership is not transferred. The effect of death. While in stock corporation, shares can be acquired through succession. Dues in non-stock corporation. Payment of dues can be required. While in stock, no dues are paid. Effect of termination in non-stock. Extinguishes all rights of a member in the corporation or in its property, unless otherwise provided in the Articles of Incorporation or bylaws. While the effect of termination in stock. Extinguishes all rights of a shareholder in the corporation. Section 91. Election and term of trustees. Section 91. Number of trustees versus directors. The Articles of Incorporation may provide any number of trustees. As for a stock corporation, it must not be more than 15. Term limit of trustees and directors. In a stock corporation, the directors shall be elected for a year and may continue to hold office until a replacement is elected. In a non-stock corporation, the trustees may serve for a longer period, 3 years, but cannot hold it longer than that. Election of officers. In a non-stock corporation, members themselves may elect the officers if the bylaws are silent. In a stock corporation, the directors elect such officers by default. Independent directors. In a stock corporation, an independent director is still a shareholder. In a non-stock corporation, an independent director may not be a member of the corporation. Section 92. List of members and proxies, place of meetings. List of members. Same as in a stock corporation, the list of members and their proxies must be updated at least 20 days prior to a scheduled election. Anyone concerned in the books may be criminally liable for unjustifiably refusing to update the list or not allowing members to check the records. Place of meetings. In a stock corporation, the meetings may be held in the city or municipality where the place of business of the corporation is. A non-stock corporation, however, may hold meetings anywhere in the country provided that a. bylaws allows it, b. proper notice was given to the members.
Section 93 Rules of Distribution. Non-stock versus stock.
Non-stock. All liabilities and obligations of the corporation shall be paid, satisfied or discharged. Assets held by the corporation with conditions requiring return, transfer or conveyance, must be returned, transferred or conveyed with the following requirements.
Stock. Settlement of corporate obligation and debts.
In non-stock, assets received and held by the corporations. Limitations, only for the use of what will be mentioned, without requiring return or transfer shall be transferred to one or more Philippine corporation, societies, organizations that is involved with a similar industry. These include charitable, religious, benevolent, educational, or similar purposes.
While in stock, distribution of remaining corporate assets if any among stockholders in accordance with their contracts or through liquidating dividends on the basis of their respective interests.
Also in non-stock, assets other than those mentioned shall be distributed in accordance with the ATTY or the bylaws. Assets may be distributed to such persons, societies, organizations or corporations, whether or not organized for profit, as may be specified in the plan of distribution.
In stock, any distributable asset to an unknown creditor or corporator shall be escheated in favor of the national government.
Section 94. Plan of distribution of assets.
Non-stock. The BOT shall by majority vote, adopt a resolution recommending a plan of distribution. Each member entitled to vote shall be given a notice setting forth the plan, date, time and place of meeting.
Stock. Winding up the affairs of the corporation means the collection of all assets, the payment of all its creditors and the distribution of the remaining assets, if any among the stockholders in accordance with their contracts, or if there be no special contract, on the basis of their respective interests, by UV, Ukaigan.
Also in non-stock, adoption of plan upon approval of at least 2/3 of the member having voting rights present or represented by proxy at the meeting.
While in stock, the remaining cash and assets are totaled and then divided by the number of shares owned by shareholders. The corporation pays the shareholders the amount of cash or assets that's proportionate to the number of shares each shareholder owns.